My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of stock index futures. The first one we'll look at is UK FTSE futures. It was a day of barelys, almost and just abouts yesterday. A just about key reversal up, barely, and almost a bullish engulfing pattern as well, though not quite. Missing by just half a point. However, it does not help the current situation where the market seems stuck either side of the short medium moving average, currently at 66.17, and in between the support of the broken downtrend, currently 65.88, that makes up the upper time, or upper trend line I should say, of the recent sideways triangle, and overhead the lesser Fibonacci level at 66.84. We still have an initial target X topside for the short-term sideways triangle in a 70.05 area, but after last week's week of trying higher and getting stalled at the 6800 level, and the last 3 days action of this week is looking quite distant. I'm now looking to draw a target for the downside of this pattern. Now, so far today, slightly lower open, then moving down below the short medium moving averages, and still sliding down the ski slope of the broken yet seemingly still robust downtrend as support. What is most interesting of all is that we have a possible key reversal in the offing today, closing tonight below 66.50 or above 66.65, and we'd be on. Right now it's very much looking like a key reversal down today. Caution, watch carefully, especially the close. German DAX futures. A worrisome development yesterday for the bulls out there. It was not just that we had a second indecisive doji cross at the height of the market, though that would be enough to raise cautionary flags in one's mind, I would imagine. No, it was because we had this all second indecisive doji cross below, yes, below the whole session's action, below the important combination of the oft-mentioned broken upper bull channel line, currently at 14.665 of the May to June 2020 bull channel line, plus also below the first projected 50% Fibonacci overhead at 14.634. The only redeeming feature were the open and close were only a little under the 50% projected Fibonacci level, and the market low was once again supported by the lesser Fibonacci projected level at 14.529. This was the first close back within and under the previously mentioned combined resistances. As I've repeatedly mentioned here, just still keep an eye on it being a possible false break higher. So far today, an interesting break lower, down to the rising short moving average, currently at 14,500. However, with no real support of note now, bar some small congestion at 14,400 area, until the GAN number below at 14,193. This is coincident with the highs in early February and early March. If this continues, then last week's and early this week's move higher would seemingly become a false break. Caution, watch the close. US E-mini S&P futures. A really interesting second bearish black crow. There was also a first close below not only the rising short medium moving average, currently 38.87, but also below and outside the lower time, currently at 38.97 of the broken but still important late December to early February 2021 bullish Andrews pitchfork. This is something the bulls out there would really not like to see, I am sure. So far today, a higher open, though still below the short medium moving average, then all the way back up to test the lower time, but from the underside this time, before coming back down to a fresh low, testing right down to the key late January high at 38.62.5. This level is important as it is the base of the recent projected Fibonacci levels. Below this we have some mild congestion in the 38.17 area and 37.95 before we meet the rising medium moving average, currently at 37.80. Caution, take care on this one. Watch the close. French CAC 40 futures. An unsurprising bullish engulfing pattern yesterday, given that the previous session was an indecisive doji cross. However, what was interesting was how the market opened below the bottom of the old filled gap from February 2020, that's between 59.20 and 60.09, then dropped down to the lower time, currently 58.96, of the December 2020 to January 2021 bullish Andrews pitchfork, then rose to close higher, halting at the overhead short moving average, currently at 59.49, and thus creating the bullish engulfing pattern. However, as I've said repeatedly these past days, all is moot until prices move out of these or those tines. So far today, a lower open, then another move down below the old filled gap, down to test the lower tine again. Something the bulls out there would, I am sure, not like seeing. Below the lower tine, we have the old broken May/June to date upper bull channel line, currently at 58.57. Please don't get me started on whether the last 3 weeks have been a false break higher from this bull channel. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.